Welcome to Knockout Crypto. Thank you for following our channel. I want to just read this to you guys. We're on Instagram, Twitter, and YouTube. You can find us at Twitter at Knockout Crypto. We're at YouTube at Knockout Crypto, and we're on Instagram at Knockout Crypto. Check us out. Go ahead and subscribe to the channel if you aren't already subscribed. Subscribe to the channel. We bring you the latest and the best Bitcoin cryptocurrency news. Bitcoin opinion: a cycle is coming to an end. If you follow cryptocurrencies for a while, you start finding weird and interesting patterns scattered around a variety of technical data. It may not seem like much, but sometimes looking away from the price into other statistics can give you a refreshing view on the market. Bearish trends can tell us more about the future you might think. From psychological trends to hash rate and difficulty analysis, my goal today is to peek around the shadows, unusually what left to be. If we actually think about for a second about how the universe works, we might realize most of what is actually happening, which directly affects our lives, is plain and simply unknown. Like dark energy and dark matter, which compose about 90% of all matter in existence. To learn about price behavior, we probably want to look somewhere else. Here's how I think about it. You know, on Law and Order, CSI, or whatever crime show you like to watch on Netflix, when the good guys catch the bad guy during the first 10 minutes and you're like, I'm pretty sure that this isn't the right guy. That's precisely what I mean. This article shouldn't be taken as financial advice. It represents my personal opinion and views. I have savings invested in cryptocurrency, so take whatever I write with a grain of salt. Not invest what you cannot afford to lose, and always read as much as possible about the project before investing. Never forget, with great power comes great responsibility. Being your own bank means you're always responsible for your money. The Kansas City Shuffle. You look left and they fall right. The Kansas City Shuffle is a type of con which depends on the mark realizing they're being conned, but incorrectly guessing how it's being done. When they try to foil the fake con, they think they're uncovered, they fall into the real con. This con is most effective against marks who are too smart for their own good and will try to beat the con man at his own game instead of backing off when they discover he's trying to con them. In my analogy, the con man is the price, as it baffles you with its volatility virtues, or you could be looking somewhere else for the direction. Let's start with market sentiment. It dictates market behavior. If you want a neat tool to understand when it's the perfect time to sell, take Google Trends. People look up Bitcoin the most when prices are at its highest. I would argue it is within our nature to buy when prices are high due to excessive FOMO and hunger for quick profits. This is why it's so important to be a contrarian when it comes to making decisions. Interest over time in Bitcoin, as you see, it's falling a lot. However, do not fall for the typical continuous bearish sentiment which will drive prices upwards. It could always get worse before it gets better, always. Anything that can go wrong will go wrong. Of course, when everyone is looking right, that's when you should be looking left. My personal piece of advice: learn which foes to take on. If you're going against the entire market, the chances are you're going to lose badly. It's much a safer bet to follow smart money and not go against it. At least that's my own observation. If you don't know how to start, here's a few tips. First, buy when there's blood on the streets. Second, buy the rumors, sell the news. Third, buy when there's fear, sell when there's hype. Simple stuff, right? Difficulty adjustment. One of the most interesting indicators I found as of late was the possible correlation between the hashing algorithm difficulty adjustment and price swings. According to Element, historical cycles suggest that we may need to only experience 6 to 12 months of negative to flat difficulty growth for prices to bottom. If we take into account both the fact that people in general seem to be over Bitcoin, as well as miners are leaving the market, logically we can argue that the bearish cycle is coming to an end. As these bearish cycles, if that assumption is correct, only time will tell. However, there are two hypotheses we are more or less proven to be true. The more miners leave, the easier it gets to mine Bitcoin, as less energy is needed to mine each block. The less energy is needed to mine each block, fewer are the costs. Does that translate into huge price swings? Seems like it. Do these price swings go upwards every time? Absolutely not. We need to be careful to balance different variables to understand the overall status quo of the market to clearly see the big picture. The Bitcoin wells. What you and I are dying to know is the cost to the next bull run. Will it finally be institutional investors? By looking at other data, we might get at least a clue. For example, I do find it interesting that the top 20 richest Bitcoin addresses we find, 4 which have had the very first UTXO created either in 2016 or 2018. But wait, there's more. By crunching the numbers, we quickly see on average one transaction from each address was worth about $5.9 million. But you want to hear something really shocking? More than 50% of all the top 100 richest addresses have been created within the last 2 years. Not only that, but all these UTXOs are worth hundreds of times more than all exchanges UTXOs combined. Whatever conclusion you take, one thing is certain: there's a great deal of people with a lot of money invested in Bitcoin who can potentially change gears and start a race to the top. That's one out of many possible conclusions. On the other hand, Bitcoin distribution seems considerably fairer than most global fiat currencies, even though I personally don't see the two as comparable, as wealth usually is a measured in fiat currency, but rather in physical assets. Now, digital as well, such as real estate, precious metals, or stock. And you have a chart here of the Bitcoin address distribution. Hashing power. One of the most important measures for any cryptocurrency success is hash rate growth. That is the amount of mining power going towards Bitcoin. Just by looking at the above graph, we can quickly see the hash rate has been continuously growing. It took about 10 years to get close to 100 million hash rate. I wonder what it would take to get to 1 trillion hash rate in less than 5 years. My suggestion is that you look at the fundamental drivers in the market that affect the cost of production above what the miners are likely to expect. Then look at the potential reversal of this negative difference for the signals of reduced selling pressure. More interesting is what comes next. If we take into account the halving events, which points in time highlighted in navy blue, we can see that price seems to follow a rather simple pattern. It is ultimately correlated to the amount of Bitcoin in circulation as well as the reward block. By following those metrics, we should arrive at a price between $15,000 to $36,000 at the end of 2020. In the meantime, volatility will play the usual hand as the less liquid the market is, the easier prices are affected by short-term trading. So sometime in 2020, we're looking at Bitcoin between 15 to 35K, 15K to 35K sometime in 2020. Transaction count, payment networks, economic throughput, settlement network. There are at least 3 important variables to consider when holistically appraising a value transfer system, and the transaction rate is just one of them. Transaction capacity, typical transaction characteristics, settlement assurances. Together, the transaction rate and the average transaction size give you the economic throughput of the system, a measure of its financial bandwidth per unit of time. Even though Bitcoin is virtual, it is closer to a physical settlement system than a deferred settlement system like credit cards. Bitcoins are virtual bearer instruments. If you possess the private key which unlocks an unspent output, you are the owner of those coins and entitled to do with them whatever you want. That asset is no one's liability. In this respect, it is more closely resembles physical cash or a commodity like gold. But how do you consistently compare dissimilar value transfer systems like Bitcoin, PayPal, Visa, physical cash? I recommend broadening your focus beyond simple transaction count. That's only one component of economic throughput. What we should really be interested in is average transaction size, the number of transactions. This gives us the value of going through the system per unit of time. Another key metric is understanding how companies are reacting to Bitcoin and blockchain technology. Are organizations expanding and implementing blockchain with businesses? If so, are there any correlation between price and jobs? Job growth outpacing prices. The 1775 blockchain-related job openings in the U.S. in August 2018 is a 300% increase over the same period last year, highlighting the fact that employers remain confident in the crypto market's opportunity and continue to make long-term investments in their teams, even though the crypto market is down 70% from its highs. This proves companies and businesses are targeting technically savvy people to join blockchain development efforts, even though price keeps falling. It is important to see that there's a little correlation between blockchain-related jobs and Bitcoin price. Although the price keeps falling, each time we hit new lows, they're becoming higher than the previous. The exact same is happening to new highs. If we align low volatility to the previous points, take into account the whole argument made, I perceive Bitcoin's price will soon outweigh the moon. What I'll keep doing is averaging losses of purchasing cryptocurrency I believe to have a future. Never forget, markets tend to remain at peak highs for short periods of time, so never miss the best trading days, or otherwise you might seriously hurt future. The cycle is coming to an end. What we have to remember is that we're in a market cycle. We are in a market cycle. You have to remember that. I will continue to preach that to you guys, so you have to remember that we're in a market cycle. Market goes up, market goes down, market comes back up. Remember that. End of 2020. Thank you for following Knockout Crypto. Let me know what you think of the video. Like the video, subscribe to the channel, comment on the video. Thank you for your support, team.